Washington Journal continues.
David Cho is our guest. He's the economics reporter for the Washington Post. Here's the headline: U.S. forces 9 major banks to accept partial nationalization. What's the plan here?
Well, there are a couple elements of this plan, but this is undoubtedly a dramatic escalation of the Treasury Department's response to the financial crisis. Essentially, the biggest part of the plan is that the U.S. government will be taking equity stakes in not only 9 of the most important banks in the country, but then we'll be opening up this program to thousands of banks across the country. So this really amounts to a partial nationalization of the banking system. It's really an extraordinary measure. Something like this hasn't happened since the Great Depression, but you know, we're in a crisis that we haven't seen since the Great Depression. So, well,
why now? I mean, our viewers are familiar with the negotiations that happened up on Capitol Hill for the last couple of weeks. They passed this $700 billion rescue package. Why was that? Why was not this plan included in that initially?
Well, I think Treasury was surprised at the market's reaction to the $700 billion rescue plan. It passed on a Friday. The markets went down. And then for the next 7 days, they just continued to get hammered. Not only that, in the credit markets, lending basically froze up. It didn't look like the $700 billion plan, as initially advertised, was going to solve everything. So they started to work on this plan. I think it's been in the works for more than a week. And as soon as they released it, in coordination with Europe was doing very similar actions. You know, you saw the reaction of the markets yesterday. They had their biggest point gain in history.
And we're expecting more details on this later today. Is that right?
In fact, just shortly, in about an hour, Treasury will be holding a press conference and will be revealing some of the other details of this plan. Let me just mention 2 other key details here. One of them is that the FDIC is going to be providing unlimited deposit insurance for non-interest-bearing checking accounts. It's mainly business accounts. And secondly, the FDIC will be also providing insurance for certain forms of bank debt, and that's to get lending between banks flowing again, which has been a big problem in this mess.
Want to ask you as well about the cost of this. Is this part of the $700 billion package, or there's a figure in there, $250 billion this could cost? Is that part of the $700 billion or outside of it?
Yeah, this plan includes some elements of the $700 billion package. So the $250 billion was the first installment that was being paid to the Treasury by Congress. You know, the $700 billion was going to be rolled out in installments. First 250, then another 100, and then another 350. So Treasury is going to use up all of the first installment in about a week and spend that to take these equity stakes in banks, and then they're going to ask for the next $100 billion.
From Congress, so Congress will have to pass another $100 billion.
No, the $100 billion, they can just ask for Congress, and it doesn't need congressional approval. The last 350 does need congressional approval, so they would have to get approval for that. The FDIC parts of the plan are new, and that will be added to the $250 billion figure, and this is kind of a more comprehensive plan than the rescue package that was passed.
All right, David Cho will be with us to answer your questions this morning for about 25 more minutes. If you're a Republican, dial 202-737-0001. If you're Democrat, 202-737-0002. And all others and independents, 202-628-0205. In the headline, you use the word force. U.S. forces 9 major banks. Why the word force?
Well, there was a kind of a monumental meeting of the chief executives of these 9 banks with Ben Bernanke, the chairman of the Federal Reserve, Hank Paulson, the Treasury Secretary, and Sheila Bair, the FDIC chair. And while the program officially was going to be voluntary, when we talked to people in the industry, they said Paulson made it very clear that they had very little choice in the matter and that they had to submit to this program. There were executives that didn't like this, but you know, Paulson said, for the good of the banking system, you must do this, and eventually everyone relented.
What guarantees does the federal government and taxpayers have that the banks will use this for what the Treasury wants them to use this for?
Yeah, there is no structured program that forces them to use the money that they get from the government in any particular way. In fact, you know, I think it would be proper for the government to allow the money to be fungible, for them to use it in the way they see fit. However, regulators warned the chief executives they will be watching very carefully to see how they use this money, if they're just going to use it for their own purposes.
Before we get to this first phone call, just explain how it will work exactly.
So the government will be handing over money to each of the banks. I think some of the banks got varying amounts. Some got 25 billion, others got 20, others got 10, depending on the size of the banks. And in exchange, the banks have to hand over an ownership stake, actual stock, to the government. So the government now has investments in these companies. And with this capital, the government's hope is that lending will start to flow again, and that's been a big problem in this credit crisis.
And when you say lending will start to flow, are you talking about lending between banks?
Yeah, lending between banks, and in addition to that, lending between banks and other institutions like, you know, student loan companies, credit card companies. I mean, they're expecting lending in general to start to loosen up.
Okay, great. First phone call here for David Cho comes from Roseburg, Oregon. Democrats line. Go ahead, caller.
Good morning. Good morning, Greta. Thank God for C-SPAN. Mr. Cho, in my opinion, the situation with the $700 billion bailout, it's seemingly the American banks are finally, basically were dragged through that door that had over the top of it socialism to some degree, which, in my opinion, is a good thing. It's reflective of what, okay, well, the rest of the industrialized world has some form of socialized medicine for its citizenry, except here. Why is that? Drug manufacturers, insurance companies, and lawyers, I guess. But it's also reminiscent to me, anyway, of the situation with Terry Roosevelt and J.P. Morgan, when Morgan was locked in a room with a bunch of bankers and finally came out with something that was going to solve that situation. And I'm thinking, really, there's too much greed. And these guys have basically, you know, we have a situation in this country where we have rich and poor. That's it. We have a lot more gated communities now, plus the situation with all the lobbyists. A lot of these people, if it were my brothers, I would take them out and blow off their kneecaps.
Well, I probably wouldn't go that far, but you bring up a good point here that we really haven't seen anything like this since the Great Depression, and when the U.S. government went in and kind of took some ownership stakes. I mean, it was a little bit different, but there were some parallels here. But I do think this is an extraordinary measure to have the government basically partially nationalizing the U.S. banking system, and to be seeing this going on around the world. I mean, it really speaks to the global financial system that we're in right now, how everything is interconnected.
And we mentioned that Treasury Secretary Paulson and Fed Reserve Chairman Bernanke will be making an announcement around 8:30 a.m. Eastern Time.
That's right.
About this plan. What do you expect to hear from them?
Well, I think, the president is going to speak at around 8:05 and basically give the overall views of this, the government views of this plan. In addition to that, at 8:30, I think Treasury is going to be laying out exactly the details of how this is going to work, how banks can participate, because while we have the 9 banks that are participating, there are thousands of other banks that really this is open to, and they will have 30 days to decide, are you going to be in or are you going to be out of this program. So how exactly banks can participate, what are the restrictions? For instance, banks may have to freeze their dividends. If they want to participate, they may have to lop off some of their executive compensation, golden parachutes. There are other restrictions that may apply, and those kinds of details will be rolled out.
Freeze their dividends. What does that mean? What are the ramifications of that?
So essentially, you know, when you issue stock, the stockholders get a regular payment called a dividend, and financial stocks historically have paid very good dividends to their shareholders, but that means essentially the Treasury would want them to freeze their dividends, meaning they cannot increase them. They can reduce them if they so choose, but they cannot increase them. And the goal of that is really to tell banks you need to reserve capital to lend, not to reward shareholders here.
But what about the taxpayers as a shareholder? Is there any situation where the taxpayers will get a dividend revenue stream from this situation?
Yeah, well, the taxpayers will be getting a particular type of share. It's called preferred shares. It won't work like common shares. And what dividend payments they're getting isn't yet clear, but that will be likely laid out at 8:30. But the government's hope here is as the banking system improves, taxpayers could see a nice little gain as there's a recovery.
Well, this is how the market reacted yesterday. The front page of the New York Daily News. Just in case you'd forgotten, this way is up 936 points. The Dow soars to biggest point gain in history. Frankfurt, Indiana, Republican line. Go ahead.
Well, what a situation we have here. It's a historic one, and the thing that I see is that this nation already has been designed for success, and we had a great system, a capitalist system, and a free enterprise system that took us up through hundreds of years. When we did a big change with FDR, we added socialism to try to resolve a crisis. And it would have perhaps ruined us had it not been for a war. And we won a war, and so it forestalled the damage that FDR caused. With the winning of a war, capitalism generally increases. It's given a strength. With the losing of a war in Korea, and the losing of a war in Vietnam, and then the lingering of the war not won in the Middle East, capitalism suffers. It's punished. And it's difficult for people to see that FDR mixing socialism with a system designed for capitalism was a bad thing and not a good thing. Sometimes it's held up today as a good thing, but it was not a good thing. It's war that clouds the issue, but it was the war won that should be given the credit.
Well, there is an interesting twist that you bring up here. I mean, we do have a free market president and a Treasury Secretary who does believe in free markets, and they have been behind some of the biggest government interventions in history. A lot of people point out that irony. Hank Paulson, in my conversations with him, often describes himself as really as a pragmatist, and I think he does what he can to, even if it involves going against some of his convictions about free markets, to solve the current crisis. But I do think regulation is going to be a big debate next year. How do we regulate the banking system?
On that point, Ben Bernanke writes today in the Wall Street Journal an opinion piece saying the most immediate responsibility of policymakers and elected officials is to restore confidence in our credit markets. Even as we do this, we must begin to consider long-term reforms that will mitigate similar crises in the future. What do you think when it comes to regulation? What are you hearing from your sources about what's on the table?
I think actually overhauling the regulatory structure is going to be one of the top priorities of Congress. I know Barney Frank has said he's going to be holding hearings in January as soon as the next Congress is in. And Paulson actually laid out what's called a blueprint of how that could look. It involved combining regulators and eliminating entire agencies. I mean, it was a really sweeping overhaul of the regulatory structure. I don't know if Congress is going to go that far next year, but we could see some major changes in the regulatory structure.
And what's the reality of agencies and members of Congress who have authority, i.e. power, over these agencies giving that up?
The reality is it may be very difficult, but there may be some changes. I think Barney Frank had said to me, and Barney Frank is the head of the House Financial Services Committee. It's a very powerful committee. And he said it may not be worth the political capital that it takes to get rid of some of these agencies. However, he does want to see some streamlined regulation. And it's not necessarily more regulation or less regulation. It's just overhauling the regulatory structure, some of which hasn't changed since the Great Depression. As
we go to this next phone call, high five on the floor of the New York Stock Exchange yesterday. This is the New York Times. Mishawaka, Indiana, Independent Line. Good morning.
Good morning. Isn't it true that since the creation of the FDIC, that the banks have more or less been socialized by the federal government? That's my question. Thank you.
Well, socialized is probably gone too far, although we are seeing a partial nationalization right now. Socialized implies some kind of government control. The FDIC actually provides deposit insurance only up to $100,000 for individuals and families per institution. Really, you don't have any more control other than that. But we are seeing the FDIC get more involved with this comprehensive plan. The FDIC will be insuring some of their bank debt. They'll be providing unlimited deposit insurance for non-interest-bearing checking accounts. That's really aimed at small businesses and other businesses that rely on non-interest-bearing checking accounts for things like payroll. So they are getting more involved, but socialization might go a little bit too far here as a descriptive adjective.
All right, Detroit, Democrats line. Good morning.
Good morning.
Good morning.
When is the government going to see that the banks in general has been doing predatory lending towards people with credit cards and so on, with credit rates up as high as 20 and 30%? I mean, when is we going to have a usury law that will protect the public from the banks and their predatory acts?
Very good question. Predatory lending was addressed in a number of hearings this past year, and the Federal Reserve, that actually has some consumer protection regulations, they made some changes to their consumer protections as it regards to mortgages. Congress has been looking at credit cards this year on a number of occasions, but in the regulatory overhaul, there could be the creation of a separate consumer protection regulatory structure. That's something that Paulson suggested. A number of Democrats who control Congress want that as well. So you could see some more stringent consumer protections happening right now. And I think more importantly, right now, there is really the political environment that lawmakers want to see more consumer protections because consumers are clamoring out for them. So we could be seeing that happen early next year or later next year.
Your headline mentions 9 major banks. Can you mention some of those banks that are going to be receiving this money?
Sure. These were not necessarily the largest banks. Of course, it includes some of the largest banks, but some of the key banks, you could call them the leading banks, banks such as Bank of America, Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley, and then some of the banks that are important to the Federal Reserve System, such as State Street and the Bank of New York Mellon. They'll be getting smaller stakes. And the stakes, the equity stakes range from everywhere between $2 to $3 billion to all the way up to $25 billion, depending on the size of the banks. But they're all the most important banks in the banking system.
Any danger in picking winners and losers here?
Well, the program will be open to all banks, I believe starting today, and that program will be open for a period of 30 days. So any bank can participate, and they would all be subject to the same standardized restrictions if they do participate.
And we're going to learn more about this later on this morning, both from President Bush as well as Treasury Secretary Paulson and Federal Reserve Chairman Ben Bernanke. We'll try to bring you both of those comments when they happen this morning. Savannah, Georgia, Republican line. Go ahead.
Good morning. You know, the government can't do many things right, and people will remove their money from these banks, and the banks will be a piggy bank for the politicians, and George Bush will leave office a billionaire.
Well, you know, there are certain consumer protections, however, to prevent bank runs. And you do bring up a good point here that a lot of this is aimed at preventing bank runs in the future, so that to discourage people from removing their money from banks, not only individuals, but businesses too. I mean, if business removed some of their accounts that are important to pay for their payrolls or for other purposes, really these banks could teeter. But with unlimited deposit insurance, businesses really don't have to worry. They can leave their money there. Individuals, the deposit insurance for individuals used to be $100,000, and now that has gone up to $250,000 under that big rescue package that passed. So the government hopes more people will feel secure with their money in these banks, and these banks could remain sound and strong.
Shirley, Massachusetts, Independent Line.
Yes, how are you? Thank you for taking my call.
Good morning.
The question I have is, everything started with the mortgage industry, with the problems. And I'm just wondering why, over the past 5 years, that the government or Bernanke or Paulson just didn't take the heart of it, which was the mortgage industry, and just mandated all these banks to take all these and say, look, we're going to refi everybody, we're going to minus off 60% of the principal and just refi everybody and stop all the foreclosures at one time, and I don't think we would be in this mess.
And another idea that is out there is for the government to come in and offer low-interest loans for 20% of all mortgages that are out there.
Yeah, there are actually a number of mortgage plans that are being proposed right now, and I think during the presidential debates you saw McCain come out and say, I want to change the principle of a lot of these loans and rework the mortgages. Obama wants to has a plan that has elements of this, and it has been suggested for the government, instead of spending $700 billion to bail out these Wall Street firms, why don't we spend $700 billion and rework these mortgages, and that will heal some of these mortgage-backed securities. I think these ideas have merit. There's one issue with reworking all these mortgages, and that is it takes time. It could take a long time, actually, and in the meantime, the banking system could fall apart. But the caller actually brings up a great point, that it's extraordinary that all these problems started in this little thing called subprime mortgages and then just spread to this global crisis as the mortgage lenders got shaken, and then the banks that backed them, these big huge banks, confidence got shaken in them, and then that spread across the global system. But who would have, it seems obvious now looking back, but it might have been difficult to predict at the time it was happening. But for years, really, the regulators ignored some of the warning signs that were happening among these subprime mortgage lending practices.
The president is currently meeting with his working group right now at the White House in the Roosevelt Room, and he's expected to speak at about 8:05, looking at a live shot there. Expected to speak in the Rose Garden about his meeting with his working group, which includes Treasury Secretary Paulson as well as Federal Reserve Chairman Bernanke. Next phone call here, Vista, California, Democrats line.
Good morning.
Good morning.
I wanted to just give a little bit of reflection from ordinary citizens here who basically are pretty confused by all this. It's hard to gather all of the information and get it right. When you talk about these large amounts of money, people have like myself, we have no idea how much money that is. So when we try to gather information, we listen to people like yourself, we listen to people on all sides, and then we have to kind of just go with the political party that we think is going to do the best. It all winds up being guesswork in a way. But what I'd like to say is that I believe that we have given the Republicans a lot of time to try and do well by us with the economy, but they have put so much of our money into the tanker, into the war, that I guess money doesn't mean much anymore. And then the final thing that I wanted to say was, a week or two ago, a fellow called in, a black individual called in thanking white people for voting for Mr. Obama. And I was so touched by that. I'd been sensitive to black issues all my life, waiting to vote for a black individual, and now I do have the chance. And I think that these people, actually the Democrats, do stand a much better chance of understanding the underpinnings of all this. that's why I'm voting for Democrats, and I would like to allow the Republicans to have an equal shot at it too, but we've really given them a lot of time.
Thanks, caller.
Yeah, really, this is happening right before the election, essentially, and it clearly is weighing into how people feel about the race. It does seem like Obama has widened his lead a little bit over McCain, and some of the more specific polls show that people do trust him on the economy. But we still have a long, it sounds like only weeks, but in the financial world, that's an eternity. A lot can change between now and then.
You've had a busy month or two covering this.
Or two.
When do you expect, or how much do you expect these economic headlines like this one in the Detroit Free Press to dominate? How long do you expect economic headlines to dominate news coverage?
I think it may dominate for quite a long time. I mean, every time we think we're at the end of a cycle, we thought when the government nationalized Fannie and Freddie, we would have a break here, and then Lehman Brothers, AIG, and then the rescue package, and now this more comprehensive plan. It seems like the measures keep escalating as the financial crisis keeps escalating. And I think if there isn't a major turnaround in the credit markets and in the other markets, this will begin to hit the real economy. We've already seen signs of that. Some businesses are going under. GM, a huge company like that, is struggling quite a bit. And next year we could continue to see a number of businesses struggle if we do not see a major turnaround, if these government efforts aren't successful.
Here's the headline in USA Today. GM Ford stocks hit road to recovery. Prospects of credit thaw merger talks power rise. That's the headline this morning in USA Today. Albany, New York, Republican line. You're next.
Yes. Hi. Good morning.
Good morning.
Good morning.
I would like to just throw out a question to you to see what you think of it in terms of a solution in one little aspect of this monumental problem. We have decided that we're going to put out, hundreds of billions of dollars to rescue our plan, our government, and our whole country. And we're going to borrow that money from the Chinese, if the information I'm hearing from C-SPAN is correct. Is that correct?
That is only partially correct, but the Treasury will be putting out bonds that could be bought by anyone to pay for some of this money. And the Chinese, Japanese, and other foreign banks have been big buyers of these bonds in the past.
Okay, because that's that's very interesting, because what my proposal was, to see what you thought about it, was to establish a bond where American people can actually invest the money that they've sucked out of the market and wanted to look for safe places to put it, and call it the M bond for Main Street, and rally some patriotism like we did in the Depression and during the wars, where we had war bonds to support our people. I would like to see our money, the interest from those bonds, going to Americans rather than out of the country again. This is just a small piece, but I'm sure there are a lot of people who would be willing to invest in those bonds. And when you look at the whole issue of where all this money went in Wall Street, my thought is that it's a shift of money. It just didn't burn up. It's a major shift of money where lots of people have it, where others have lost it.
Thanks, Colin.
Really, actually, that's an interesting idea. Some of the bonds can be bought and are bought by U.S.-based companies. PIMCO, for instance, is a big holder of Treasury bonds and other types of bonds, for instance, and that's a big U.S.-based investment firm. But the buying of bonds, because it's just kind of put in the free markets, it's almost open to anyone, and it really speaks to the global connectivity of the markets. When China began to struggle as their stock market came down, they started to withdraw a little bit of their buying of U.S. bonds, and a lot of people in the U.S. were concerned about that. We have just lost a big buyer of our bonds potentially, and it really does speak to how this global financial system is so interconnected.
Next phone call here in New Orleans, Independent line.
Hi there. How you doing?
Good morning.
Good.
It always amazes me that people that supposedly know so much about money seem to keep on messing us up. It's thank God for the internet, because people have probably found out more about financing and banking than they ever wished to know recently. I have been aware of it for several years, thanks to prisonplanet.com, listening to Alex Jones radio, and you can find out many things, specifically like the Federal Reserve Bank is not federal. It is privately owned by private banks that I doubt even your money expert here can tell us who owns it. These private banks have garnered the issuance of our money, which in Thomas Jefferson wrote, if the American people ever allowed private banks to control the issuance of their currency, first by inflation, then by deflation, the banks will deprive the people of all property until their children wake up homeless on the continent their fathers conquered. The issuing power should be taken from the banks and restored to the people to whom it properly belongs. In truth of fact, we are making money from nothing from the banks that issue it to us, loan it back, our money back to us at interest rates, so money out of nothing, where we are perpetually in debt that can never be paid back. That's where we find ourselves. We are now serfs. This entire banking system we have is a fraud.
Well, one thing maybe I could bring up here, the Federal Reserve, though, is an agent of the government. But one thing you mentioned in the beginning of your talk, how difficult it is to understand what's going on and how the internet may help. This is a very complicated problem. It does involve very complex derivatives called credit default swaps and mortgage-backed securities. I mean, instruments that were invented and didn't have a lot of transparency. A lot of people couldn't understand how these things were worked. There wasn't direct regulation. There weren't people watching them directly, and it was a very complicated problem.
David, I'm going to step in here. The president is making his way to the microphones, as you can see in the Rose Garden. Let's listen in to his statement on the economy. What's your reaction to the president?
Well, this is no doubt an extraordinary intervention by the government, and you could see how it must be painful for these free market advocates to be putting forth such an extraordinary intervention. You could see President Bush mention that these measures would be limited and temporary. They're limited from a certain point of view, but they're extraordinary from another point of view. And he had the line not to take over the free markets, but to preserve them. I think the hope is eventually, by the architects of this plan, that eventually the free markets will prosper on their own.
And any indication from people that you're talking to about when that would come about? I mean, how long is short term?
Well, some of these measures, like for instance, the guarantee behind bank debt that the president talked about, that actually lasts 3 years. Some of the measures, the temporary unlimited deposit insurance for non-interest-bearing accounts, that will last until next year. But the bailout plan, these equity stakes, you know, it is unclear how long the government will hold these stakes. At a certain point, they will want to sell out and cash in for taxpayers.
All right, David Cho, economic reporter with the Washington Post. Thank you for your time.
Yeah, sure, no worries.
We're going to continue this conversation with Eamon Javers of the Politico. We're going to focus, though, on the two presidential candidates and what they're saying about the economy.